Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. On today's show, what Trump Liberation Day tomorrow means for Bitcoin and the crypto market. Also, why buying Bitcoin now is better than later as BTC price consolidates within falling wedge. And Bitcoin stays down, but whale wallets quietly climb to a 4-month high. We're going to go through our market watch and Bitcoin technical analysis as well. All this and so much more on today's show. Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. Today is April Fool's Day, April 1st, 2025. And tomorrow, of course, is the American Liberation Day, as dubbed by President Trump, where the tariffs are going to take place in many, many countries around the world. There are 20-25% tariffs. And oddly enough, the biddy is pumping. Let's see if it's momentary and if prices drop again tomorrow. But as of right now, they've basically seem to have hit the bottom and up 3%. Let's get right into our Bitcoin market watch and technical analysis and see what I'm talking about. BTC up almost 3%, $85,000. Ethereum up 3.5%, $18.93. Solana up 1.5%, $126. XRP up 1.8%, $2.12. Cardano up also 2%, 67 cents. Doge up 3% to 17.2 cents. Taking a look at the crypto bubbles, we have about 90 some odd percent in the green for the day, including EOS up 11%, Walrus up 8%, Bonk 12%, Algorand up 4%, Pepe up 4%, Ethereum up 3%, Sonic up 3%. Curious if we go for the past hour, and of course everything's kind of dropping back down for the hour. Let's zoom out for the weekly. A lot of red for the week. About 95% in the red compared to the green. Move down 27%. IP down 27%. IMX 26%. And zooming out to the monthly, we've got Jupiter up, down 48%, along with Jasmy down 45%. Trump coin down 37%, as well as Injective. Yeah, interesting. Hopefully we see a lot more green in the near future coming up. We shall see what happens. I've got the scoop for you a little later on in our stories about the Trump Liberation Day and what we can expect on the Bitcoin and crypto front. Currently, the Bitcoin market cap is at $1.68 trillion. Ethereum is at $228 billion. XRP $123 billion, Solana $64 billion, Doge $25.5 billion, Cardano $23.5 billion, and Tron $22.5 billion market cap. The total market cap for all crypto is at $2.69 trillion as we speak. Bitcoin holds 62.62% of that. Ethereum 8.5%, XRP 4.5%. Currently, we are at a 44 in neutral in our crypto fear and greed index. Yesterday was a 34 in fear. Last week was a 47 in neutral. There's currently 1,107 days until the next Bitcoin halving in 2028. There are 159,670 blocks until that time. Getting into the total market cap by assets globally, we've got gold at down a bit from yesterday, 21.1 trillion, Apple at 3.3 trillion, Microsoft 2.8 trillion, Nvidia 2.6 trillion, Amazon, 2 trillion. Silver, 1.9 trillion. Google, 1.9 trillion. Saudi Aramco, 1.726 trillion. Biddy right behind them, 1.686 trillion. And Facebook to wrap up the top 10 at 1.48 trillion. You can currently get 1,176 Satoshis for one fiat US dollar. And speaking of the US dollar, the current US national debt is 36,671,600,000,000. Big bucks just keep flowing out. This year, as we've seen in previous stories, just paying the interest on the debt is going to cost the U.S. just under $1 trillion. It was like $950 million. So not a good look, folks. This debt clock here is just a travesty. So I don't know if they're going to be able to do anything with it. This is why the biddy to the savior, the Bitcoin reserve, the idea is buy it, hold it, pay off the debt. So interesting that there's such strong resonance and belief in the Bitcoin that it will be able, the only thing that'll be able to get rid of this $36 trillion debt. And of course, by then it's going to be 50, 60 trillion. Tomorrow we have a Trump Liberation Day, as he's dubbed it himself. What Trump Liberation Day means for Bitcoin. Let's check this out. Digital assets rose a day before the U.S. president was set to announce sweeping trade tariffs, but analysts remain wary about their impact. Major cryptos rose on Tuesday amid uptick in investor sentiment that tariffs imposed by the U.S. Donald Trump on his Liberation Day Wednesday would be less severe than anticipated, but analysts remain wary about a potential trade war's impact on markets. Bitcoin's price was recently trading at about 84,900, a more than 2.5% gain over the last 24 hours, according to data provided by CoinGecko. The coin briefly touched 85, as it is right now, for the first time since last week. Traders are buzzing over Trump's tariff chatter for April 2nd and are leaning to the hint that there will be softer policies than expected. Sid Powell, CEO and founder of Maple, said in an email to Decrypt, "Nothing that tariffs always shake up things. After weeks of tanking prices, any relief like this could spark FOMO and a quick bounce back for BTC," he continued. But Powell added warily, risk assets like crypto might take a beating if tariffs end up boosting the dollar or slowing global growth. While validity is a lock, tariffs always shake things up, and it's a wait-and-see moment for investors to know if their prediction of softer policies is correct. So, first of all, his article, tariffs, what they're going to do is they are going to reduce the price of the U.S. dollar, so it becomes cheaper for other countries to trade with the U.S. So, boosting the dollar, that ain't happening. It's going to do the opposite. BTC's rise comes as stock and other risk-on assets have fluctuated in recent weeks, with investors largely fretting over Trump's erratic tariff pronouncements. The president, who has indicated repeatedly that he would apply sweeping measures on the U.S.'s major trading partners on Tuesday, said he had settled on a plan. Markets seem to appreciate the likely resolution of an issue that has lingered. Major altcoins, including such as Ethereum, Doge, and Solana, are also trading higher. Ethereum was recently priced at $19.17, up 4% over the past day. Doge stood a little over 17 cents, a 3% rise, and Cardano was up 2.5%. These coins and Bitcoin have been swooning in recent weeks as fears mounted that a global trade war would trigger a period of stagflation, a toxic mix of declining growth and rising inflation, which recent economic indicators pointing downward. On Tuesday, the March Purchasing Managers Index showed prices increasing at their fastest rate since mid-2022 and factory activity contracting. Last week, the Conference Board's Consumer Confidence Index plunged to its lowest level in 4 years. From a risk management perspective, it makes sense for the market to remain on the sidelines, awaiting greater clarity on the impact of tariffs. Trump's Pedro LaPenta, head of research at Hashdex's head of research, Pedro LaPenta, told Decrypt, adding that there will be a continued volatility in markets as the tariffs take shape. He added optimistically that Tuesday's crypto price spike suggested that the market is shifting toward a buyer's mode and anticipates a less severe impact from tariff announcements. Institutional demand was picking up, he noted. Other risk-on assets inched up on Tuesday, with the tech-focused NASDAQ and S&P rising 0.75% and 0.38%. But traditional safe haven gold also ticked up, continuing its recent path. Trump will announce his tariffs with immediate effect in a Rose Garden ceremony at the White House on Wednesday. He has indicated that he is uncertain about their short-term impact. Excuse me. In a message to Decrypt, Joe DePasquale, CEO of crypto fund manager Pitbull Capital, wrote that investors had grown more optimistic that tariffs would be more targeted, excluding some countries and avoiding cumulative levies on specific goods. We feel this helped lead the modest recovery in crypto markets, DePasquale also wrote. However, the overall market remains cautious as the full impact of the tariffs will depend on their final scope and implementation. Therefore, while there is some optimism, the situation remains fluid and investor sentiment could shift as more details emerge. Yeah, when going through articles today, I read another article that basically said, now's a good time to buy, and tomorrow might be too late. Now, when I say tomorrow, I mean the next coming few days, coming week. We'll see how that plays. It's so hard to buy in right now. I mean, the time to buy in would have been a week ago. And of course, if you're doing dollar cost averaging, now is still a good time to buy in. But just to really see what happens to the markets tomorrow, if the markets tank, then of course, it's time to buy the dip. If the prices rise, then it's FOMO and it's shit. I missed a great buying opportunity. So, a bit touchy. It's kind of like, despite what this guy says, this analyst, it's almost like, if you're sitting with cash on the sideline and you want to invest in Bitcoin, invest some maybe right now, or would have been good yesterday, the day before, and keep the other half and wait to see what happens tomorrow and then hop in with the rest. Tomorrow might be the way to go. Why buying Bitcoin now is better than later as a BTC price consolidates within falling wedge, what we were just talking about. Bitcoin price correction over the past week has caused mixed emotions among investors, with some indicators pointing to possible further declines. However, according to one analyst, the current phase could represent the last opportunity to buy before the next major rally. Popular crypto analyst Captain Fabic, posting on social media X, believes that Bitcoin is ready for a bullish breakout as it continues to consolidate within a technical pattern that typically precedes upward movement. Falling a wedge pattern hints at incoming bullish breakout. Technical analysis of the Bitcoin daily candlestick time frame chart shows that the leading cryptocurrency has been consolidating inside a falling wedge for nearly 4 months. This falling wedge pattern, known in technical analysis for its bullish implications, began in December 2024 and encompassed the period from its all-time high in January until the intense correction in March. After peaking at around 85.5 earlier this last week, Bitcoin spent the entire week on a gradual pullback, reaching as low as 81,000. Interestingly, Captain Fabic interprets this decline as a healthy consolidation rather than a bearish reversal, saying that the correction phase is now nearing its end. He noted that the wedge pattern suggests a breakout is due at the beginning of April, and that this breakout could drive the Bitcoin price toward new all-time highs at the end of the month. Sure, we were just talking about this yesterday, and with other analyst predictions, and the price we calculated was from the current price over, it was a 2x plus a little bit. So we calculated it was approximately 170 something thousand toward the end of April. And when we pulled up our trading view chart, which we'll do again right now, we noted that this is the point that we're at. This is, my analysis. Even though this says January, February, right? But when we look at the peak is end of April. So maybe this is shifted a little bit, and maybe, from this point here, so I'm effectively using this right here, right? And pointing to this. Okay, so we've got the price up. Here we have the price up. See the little correction right here? Because they were talking about how the price was mirroring the 2020 cycle, and they overlaid it, and it was pretty much identical. So here we go with the price up, then some sideways action, then another jump up. So bringing us basically to here, right? The jump up, then dipping again. So that's what we've got here. And if this holds true, again, this is not what the other analyst was saying, but this is where I see the current 4-year cycle at. So I see that we're right here. So again, right here. So if we go from the lowest price in this scenario, which is 29,500, so we'll call it 30K, which is right here, to the peak, which was end of April, right here, Thursday, April 22nd, 2021. The price was 64,500, so that's 2x plus a little bit. I mean, we could do the math. 65,000 divided by 30. 2.16. So then, if we take this over here, right, and we do the same thing, so let's take the price that we're currently at, the bottom here, so 78, that was when we hit the 76.5, so we'll call it 77. So 2.16 times 77,000, 167,000, exactly what I was saying. So this next peak from here, we could jump up to, again, we're in April, right? We could very easily jump up to this 167,000 within a couple of months. So like from this time here until the peak, let's just count that. So this was February 1st until April 15th. So a 2.5 month period, we had a 2x. So, Bitcoin has a habit of making these huge jumps like this. So we very well could see April, May, middle of June, a 2x price to this 167,000. And again, if we're following the historical patterns, I would then expect another, we're talking mid-April, we'll call it end of April for ease of thinking. By 1 month after that, the price was then right back to this level where it found support, this $30,000 level right here. So in our case, this 76,500, 77,000 level. And then, of course, it took a little bit more time to get right back up to the total cycle peak was just under 70,000. So, and again, so let's do the math again. So we've got 166,000. So that would be this peak in, so 167K in our next cycle. And then if we then do the math again from the 30,000, so let's bring back our calculator. 30,000, 69,000, so let's call it 70,000 divided by 30,000. So then we could the next peak, we could be talking 2.3 times. So 2.332 was all threes times 77,000 we used. Oops, that's not going to work. 2.33333 times 77. There we could get up to 180,000, we'll call it. So then this peak could be 180K. Again, if we're following historical patterns. So peak 1, which hasn't even happened yet, right? We're right here in my estimation. Right here to be exact. Again, looking at the chart, up from the bottom, right? The year of the halving, the halving happened right here in 2020, right? The halving happened right here in 2024. Right about here, 2024. Okay, so we could very easily equate this right after the halving, about April 2024. There we are, exactly right there. 2020, pardon me, and then we've got April 2024 right here. Right? Sideways, 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 big jump, down a bit, leaving us at this level right here where the index finger is pointing right now. So this is what, again, this is not financial advice, folks. I'm a big Bitcoin enthusiast, but the best thing to do is do your own research, really look at this thing. But personally, this is where I feel like we're at in the Bitcoin cycle as we speak. So the next pump up to 167, 170K is very feasible in mid-June. Starting to pump as of now, as of this month. Again, we'll even see what tomorrow holds, right? You don't know. Bitcoin does its own thing, but this scenario seems pretty feasible if we kind of overlay last cycle charts with this cycle. And, I might actually do some, graphic work and overlay these things and see where it goes in the next couple days. But this is certainly one thing to look at. Cycle peak 167, then a dip, and then back to the complete cycle in around October, November to 180, and then falling off for a couple of years before things pick up, coming on to pre-2028 cycle. That's where I'm going with it, and that's kind of my thought. And what we're seeing here in this guy's chart isn't that much different. The analyst predicted that the Bitcoin price would trade around 109,000 at the end of the month. If realized, this forecast would not only surpass the current all-time high of 108,000, yeah, $200, but also affirmed that the correction that played out throughout March was building toward a continuation of the broader bull cycle. That I agree with. Bitcoin has declined over the past 2 months, with February ending with a 17.5% decline and March ending with a 2.19% decline from its month open. As such, Bitcoin closing the month around 109,000 will also mark the end of the prolonged correction trend. Whale accumulation. Yeah. Bitcoin stays down, but whale wallets quietly climb to a 4-month high. I've been talking about this for a while, folks. Prices are down. You know, all the schmoes are selling. Oh my God, Bitcoin's going to zero. And the whales, you know, nice depiction of whales here, are buying up the biddy like there's no tomorrow. The nation states buying up the biddy like there's no tomorrow. People with the big money buying up the biddy. On-chain data shows the Bitcoin whales have seen their population grow recently, despite the bearish action that the price has been facing. Bitcoin whales have seen notable growth in past 5 weeks. According to the data from the on-chain analytics firm Sentiment, whale-sized Bitcoin wallets have recently climbed to their highest point since December of last year. The indicator of relevance here is the supply distribution, which tells us, among other things, that the number of wallets that belong to a particular coin range, the metrics value for the 1 to 10 coin range, for example, represents the number of investors or addresses who own between 1 and 10 tokens. These are whales? I thought the whales... here we go. In the context of the current topic, the range of interest is 1,000 to 10,000 coins. Oh boy, is that a whale. The investors, excuse me. The investors of this size, 84 million to 842 million. What the... Now that's a whale. In US dollar, are popularly known as the whales. Due to the massive scale of their holdings, these investors can carry some degree of influence in the market. No kidding. Naturally, each of them on their own may not be relevant for the cryptocurrency, but the group as a whole can be. The supply distribution helps track exactly the collective behavior. Now, here's the chart shared by the analytics firm that shows the trend in Bitcoin supply distribution for the 1,000 to 10,000 coin group over the past last few months. So, whale wallets way up here. And we saw what happened after December. This should be December. Right around here. It's a little microscopic. In January, the price went, way up. So now we're seeing more accumulation here. So we would expect that the price also would go way up. Let's see what actually happens. As displayed in the above chart, the Bitcoin supply distribution for the whales observed a plummet alongside the December price peak, implying a large amount of these humongous investors excited the market. The same pattern was also witnessed during the January top, albeit a much smaller scale. This would indicate that the selling from the whales once again obstructed the BTC rally. During most of February, the metric consolidated at its lows, but starting with the last week of the month, its value began to rise. The surge continued throughout March and today. There are 1,993 whale-sized addresses on the network, the highest level since the December top. From the chart, it's visible that this growth in whale entities have become while Bitcoin has been struggling around its lows, a potential sign that big money investors have been looking at a recent price level as profitable entry points into the cryptocurrency. That's what I keep saying. Buy the dip, folks. There are many factors contributing to the polarizing crypto markets right now, but it can be taken as a slight sign of confidence that one of the most important key stakeholder tiers in cryptocurrency has grown by 2.5% in the past 5 weeks alone, notes Sentiment. It now remains to be seen whether this buying from the Bitcoin whales will pay off or not. Yeah, it's going to pay off. The Bitcoin whales, they're not whales for no reason. Like, they make their money and then they use that money and make more money, and that's how they become whales in the first place. Bitcoin has continued its sideways movement recently as its price is still stuck around the 84,000 level. Right here, we've gone through the charts quite a bit. The feature image from DALI. And DALI, they're using AI for this chart. Interesting. All right, so the whales are buying it, boys and girls. Lots of money dipping into Bitcoin. The wallets from 1,000 coins to 10,000 coins are at the highest point since they've been since December, and basically they were all buying up the biddy at that point because President Trump, the pro-crypto president, was going to become the new president. And we saw in January, whatever inauguration date was, I think it was January 10th, might have been the 20th, the Bitcoin price hit its all-time high, 109,000, just under that. And then the price has kind of been dipping ever since. But it's interesting, this correlation between the whales and the price of the Bitcoin. Now the whales are getting back in. The price is, around 80,000 or so, or it was until today. They're jumping back in, and I wouldn't be surprised to see another pump. They all see what, we see as well, that they're going to have to start printing money to pay for this debt. They've got inflation coming. They're going to have to cut rates. They're going to have to pay off this debt. They're going to have to renegotiate the interest on the current debt. They've got a lot of U.S. national debt right now that they have to actually renegotiate this year. A big chunk of it's coming up for renegotiation. It's just like when you're renegotiating your mortgage, you want the rate to be low. So if they renegotiate this debt repayment at a high rate, they're fucked, to put it nicely. They can't. The rates have to come down, and when the rates come down, they don't just come down for the government, they come down for everybody. When the rates come down, risk on assets like Bitcoin, like volatile things on the stock market, people start putting their money into it because they have an excess of money. They can borrow money at a low interest rate to do these types of things, to have investments, to buy more risky things, or even products, goods, and services, and this kind of thing. It's there to stimulate the economy, and one of the things that stimulates the economy is the financial markets. So I definitely expect that, even though, Jerome Powell says, we're only going to have, 0.5% of rate cuts this year, I think there's going to be fireworks. I think at one point, we'll see what happens with this tariff thing, but I believe at one point they're going to have to come out, the tariffs are going to cause inflation. Prices, we were just reading, the prices are already up 2.5% on inflation, and that was just for the month, right? They're going to have to do something. They're going to have to start printing money. The rates are going to have to come down. Toward the end of the year, when they have to refinance this national debt, the rates are going to have to, I don't know what they're going to do next year, but at least for the moment in time where they're renegotiating this repayment of the interest on their U.S. national debt of $36 trillion, the rates are going to have to be low. or they're going to, interest is going to be through the roof just on paying the debt. And we also covered that just the interest rate now this year, or I believe it was last year, just the interest on the debt was $950 billion. So $1 trillion just on interest they paid last year. And imagine if the rates are high like now, so the rates are twice as high, let's say, as when they renegotiated last time. So does that mean next year it's going to be $2 trillion just in interest? Right? This can't happen. They're going to have to cut down rates. Rates going down, good for the biddy. Inflation, not necessarily bad for the biddy. Printing money and the global M2 money supply, great for the biddy. So let's see what happens. I'm pretty confident that things are going to go up. We already went through the charts. If you guys are catching the show late, rewind it a bit. I think we had a fairly decent analysis of where we think, along with one of the articles we were talking about. We also followed along in our trading view chart and kind of, I think, have pinpointed really where we are in this 4-year cycle. It seems that we're about 2 months behind the 2020 cycle, but almost or very closely following the chart of 2020, but maybe 2 months behind it. Remember, folks, there's money everywhere in the world. There's $900 trillion in assets all around the world waiting for you folks to go out and get some. Money is abundant. Money is everywhere. It's time that's scarce. So spend your time wisely. If you start suddenly making more money, which is a good thing, start saving more money. Don't start spending more money. And start saving and investing when you're young. Start when you're, in your teens, in your early 20s. And ideally, you can retire when you're 40 or 45. Folks, here at Crypto News Global, you're not only watching and listening to Crypto News Global, but you are Crypto News Global. You are at the heart of what we do here. It would be great if you help me out in getting 1,000 subscribers by the end of the year. That's my goal. I definitely will continue to bring the latest news in crypto for everybody out there. And to be honest, I kind of enjoy doing this. I feel fulfilled too. So do join me on this quest and this ride. If you found this stream enjoyable, please share, like, comment, and subscribe. And we will see you on the next stream, folks. Have a good night.